Hey everyone, Dan here. We are about an hour and a half after market close on Tuesday, June 22nd. Today we're going to take our daily look at SoFi. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. Also, feel free to share these videos on Facebook or Twitter or Reddit or anywhere else that folks are consuming stock and SoFi information. I really appreciate that. In the description below, I'm going to put a link to a video that I put out during the midday today, which talked exclusively about the lockup period ending with SoFi, what dates we should be looking at, going through the documentation and picking out the relevant details and doing my best to explain them in the best way that I can. Doing my best to do my best to explain those. But have a look at that. I'll put it in the description below. And also down there, I will put a link to my newsletter sign up. The newsletter doesn't exist yet. It's just a Google form saying, hey, in the future, if and when I start a newsletter, do you want to be part of it? If so, what's your email? It's nothing to commit to at the moment. There's nothing that's going to be hitting your email inbox in the foreseeable future. But if you would like another place where we could connect, I'll put that in the description below and you can throw your email in there. Okie dokie. So we got the volume today and we got wrecked. So nearly 6% down. Heavy shorting on the day. I have no doubts. I can't wait until we get some of this data available to us, especially things, like the estimated short interest as a percentage of the free float day over day over day. I'm waiting for all of the hiccups that this ticker change causes and delays in the data being refreshed that we're having to deal with at the moment. That's why in last night's video I said there's this mirage out there that it's just this unknown amount of short interest that is battling SoFi at the moment, but it's extensive. We have a few indicators of that, and I'll point out those in these videos or in this video. And but just keep in mind that when this first half of June data comes out, I expect it to sort of surprise a bunch of folks that haven't been watching these videos and hearing me say there's a ton of short seller manipulation happening right now, a bunch of distortion, a bunch of appearing as though there is a huge supply of sell shares in the market and not enough buy to meet the sell, and thus the price getting just obliterated today. That said, the only decent thing that we're still seeing in this is this area of the chart, or I guess the chart as a whole, is continuing to perform really well. I don't know why this isn't sliding over to get out of the way, but okay, we'll just deal with it. But the chart here, it's bouncing right at this 21-21 zone. It tried to hold right here, as you see, at that 22, hit resistance after having support at that 22.36. So this chart is really holding up really well. The piece of the chart that I wish was actually holding up better, but is now completely busted, is that channel. That is now dead and gone. I think our next best hope for an additional trend line up beyond this, beyond these price zones that we have charted, of which the next one down is 20, but there's going to be some additional support here at about 20.77. You see this support here with this support here, this resistance zone here, and this support and resistance here. Right around 20.77, you're going to see a bit of something there. So I'll put a little box there for tomorrow in case we need it. We will look for a bounce there before it approaches that $20 bounce zone. So that's what I have. And, basically I want to see it break on top of this trend line right here and start to push itself up off of there. That to me is, it's obviously critical because it's just upward motion, but this will confirm that it can hold this upward trend from these lows down here in the 1950s, and that touched it here just under 21, and now it fell through it late in the day, but because it's bouncing off of this near price zone here, this near support area that we have charted, it could absolutely rise back up and open the day tomorrow mid to high 21s and regain the support of that trend line and flesh that out even further. On the indicator side of things, before we jump over to the data, RSI obviously very low. It is bouncing right now off of the oversold territory. This is going to be interesting to see how this plays out. I was talking about this in a video that I put out tonight on Wish. Wish appears to do something similar to what AMD does, and I'm starting to wonder if this is developing a bit in SoFi, where it comes down to oversold or very, very close to oversold. So if you had bought it here at 1980 and just ridden it, just watching the RSI until overbought, you would have sold out at 23.89. That's a great gain. And then if you had just waited for oversold again, didn't quite get there at 31 there. Here, we're at oversold, buying it at $20.98, riding it to overbought, $22.42. So another good gain. Then, of course, it rode up higher. Sometimes I talk about this as well. There's always a strong possibility that once something leaves overbought, if you see it just come down and show some strength around the midline, there's a really good chance it's going to make a second run at overbought. So always keep that in mind. If you're watching the stock that closely, if it makes a run to overbought and then only pulls back to the midline and starts to show strength there, there's a really good chance that it's consolidating right along that midline, which is 50 on the RSI, and that it could make another big push up toward overbought. That said, if you're taking that sort of like risky strategy, just know that the minute that you see it lose price strength and lose the center, you're very well headed toward oversold sooner than later. And so, treat your position accordingly. So anyway, now we're back down. Even much deeper into oversold than we were in those previous examples. And now it's starting to push back up. So this candle here closed from 4 to 5 o'clock. So this is after hours. So I think all of the market hours candles today on the hour were red. That's intense. So yeah, let's take a look at the MACD before we look at the data. So obviously, huge bearish momentum here. I don't mean to laugh at anyone's pain, but it's like, holy smokes. I mean, if you were looking for dip buying opportunities, average down opportunities for folks that are holding for longer term, re-entry opportunities to take a new position and look for an upswing, to me, this is it, especially after just looking at what we were seeing in the RSI. That seems to be a pretty good indicator for the time being. It's a short lifespan that SoFi has had, so who knows how that evolves over time. But, I would be looking at that really, really strong, see where it's at tomorrow morning and treat it accordingly. But, narrowing some of the distance here, so potentially the bears losing their momentum. We'll be looking for a bullish crossover either later in the after hours tonight, though I don't know that there'll be that much jumping in to buy up the stock after hours. There could be. But if not, we may get a bullish crossover in the pre-market and start the day off on a nice bull run. See where that can take us. Obviously, at this point, that hope to get back to 25 sooner than later and establish support up here looks like a long dream. But just remember that last time that it hit 25-ish area, it pulled back all the way down below 20. And that's where it, hit this trend line that it started and used that to have this huge green run up and make a stretch even higher over 25 again. So it's we wouldn't be doing anything but repeating history if it came back down and we had a huge run up toward 25 again in just a matter of a couple of days. That could absolutely happen. Nothing that would prevent that from happening, especially since it's most It's very recent history. Let's take a look at the data. So the short volume ratio continues to be very high, like we were talking about last night. Mid 20s to high 20s is incredibly high short volume ratio. 30s is bananas. I know you guys have heard me say this so many times, but just look at how many high 20s, mid 20s, and 30s we have in this column. That is data from the 8th of June to last night, or to yesterday's data, I should say. So still just keeping pace very high, day over day over day over day. What do you think is happening? It's continuing to flood the market. As we get green days and we get little run-ups, we get some closing of positions, helping it to run up. And then what happens as it's reaching key areas, frequently topped out areas, frequently challenging resistance zones, shorts jump in mass, and shove the price back down. And so that is 100% what I think is happening here. That's why every once in a while you do see some slight pullbacks, but for the most part, huge piling on, continuing with the shorts. And here's the best news of the video. We got the feed fixed, or whatever happened. I don't know, because I don't run iBorrowDesk, but whatever happened, the feed from Interactive Brokers showing the fee that they're charging to loan out the stock, their supply of available shares to borrow for short sellers is back in action, and lookity. So it's a little hard to say from yesterday to today because this broke at close on the 16th. So now that it's 6 calendar days later, we don't have a ton to go on other than look at that stinking fee. Remember when it was 261.6 or whatever it was? We are getting up there again, my friends, and that is going to put significant or a not insignificant amount of pressure on the shorts if they can't continue to have days like today or very similar to today. It doesn't have to be like that. It could even be like a couple of days like that. But if this price can stabilize, can regain that uptrend and start to work its way up, being upside down in their positions because the price is gaining strength and they're paying a 200+% fee to borrow these shares, big possibility of short squeeze potential. This is really starting to feel like the energy that I had when we first started making these videos, when it was IPOE, when we started to pick up on what was going on back here in the 14s, and we said, hey, incredibly high short interest, the percent of the float that's being shorted is really high. There's some good catalysts coming up for SoFi. It's about to get some pre-merger hype. It's going to have the ticker change. It's going to have a lot of attention on it. The shorts could be in could have a run for their money here. And we saw there a series of squeezes mixed in with a bunch of hype. Okay, but that's the best way to get the squeeze. Squeezes are very hard to come by. And so you need additional help, you need additional factors piling on. And look where it drove us, all the way up to 25 from down here at 14. That's not that big of a time span. That was May 13th, and then this topped out on June 2nd. So just a couple of calendar weeks. That's all that it was. And this is really reminding me of what we saw there again. Already a pretty high fee, pretty low supply, and then shorts just saying, nah, it's not enough. I need more. Give me more. And the broker saying, okay, but you're going to have to pay me a ton in interest in order to keep lending you these shares, and I barely have any. So, I mean, I know I've been saying this, but when the data comes out and we finally get the lovely data, and we're not in the dark anymore, and we don't have to deal with folks saying, oh, because of the dilution, there's all of this, available shares to borrow, and that's just not true. And the shares have just piled in even more given the huge bump in available shares made possible when the ticker change happened. And I can't wait until we see that data and we have it just sitting in front of our faces, and we get better daily information once we get that first drop of data. Additionally, I'm going to be looking for, because the availability is so low and the fee is so high, I'm going to be looking for strong indicators of symptoms of naked short selling. These are the conditions in which that happens, but we need supportive data to even speculate on that. and that data just isn't available at the moment, again, because of this mirage that's created with this ticker symbol change. Definitely puts us in a challenging situation from trying to digest what limited information we already have available to us. But yeah, this is really looking like it's gearing up for squeeze potential to me. And again, this could play out just over the course of a couple of weeks, maybe a month. But these things aren't overnight, and the stars really have to align for them to happen. It would be immaculate to be able to squeeze a bunch of these shorts just based off of the limited data that we have in this time frame in which retail is largely in the dark because of the data delay caused by the ticker symbol switchover. All right. Can you tell that I'm getting fired up again? I'm so ready to just gun it. There's a good opportunity here, but like I said, it's really a stars must align kind of situation. We'll see. It's a day by day, take it as it comes kind of reality, in my opinion. So it's good to feel amped up about this one again, but that fee, that low supply, the short volume ratio continuing to climb, continuing to hold very, very high. I mean, come on. These are obvious things. I need to see that fails to deliver data, showing us millions of shares being failed to deliver, and then I would have a stronger indication of what we're seeing in addition to just a lot of legitimate short selling happening in the market. Okay, well, I hope everyone is having a good trading week. I really appreciate you watching these videos and sharing these videos and spreading the word. And I will see you in the next video.